I think, and it's funny, I'm so happy I brought this quote. I think Powell was really clear at the post-FOMC presser. I mean, this is the quote. He literally said, "Let me be clear. I said it's not the beginning of a long series of rate cuts. I didn't say it's just one or anything like that." I think that this is a Fed that is still axed to go. If you think about what has transpired since the last FOMC meeting, things in Germany, and keeping in mind that he has literally mentioned Germany specifically, right? And the EU, things in Germany have deteriorated even more so since that meeting. Their PMI remains weak. Their industrial production number it actually looks, atrocious. So if global developments are sort of front and center for them, then, yeah, I think that this is something that's going to keep them going.
I mean, granted, things have changed, but things have changed maybe here in the U.S. in terms of perception, at least. The U.S. consumer is looking very strong. That's the bulk of the U.S. economy.
Yes.
Germany and the EU, for that matter, they're considering some fiscal stimulus here. So, does that argue in the case of maybe this was mid-cycle policy adjustment, maybe there are no other cuts ahead?
So I think if we hadn't had the announcement from President Trump about the tariffs, then that could be an open discussion. But literally right after the FOMC, we got that tariff threat and the world changed because there was already fragile sentiment at that point. And you could think whatever, animal spirits might have been building back were just crushed when that happened. And so, yes, the consumer is strong. Domestic economy is in good shape, but the Fed cannot ignore these trade issues and international developments and their possible feedback loops back into the U.S. economy.
Yeah, I don't think this has, but just to amplify that, because I think it's the right question. I don't think that this has anything at all to do with fundamental U.S. economic backdrop. I mean, I've said this time and again on this show, and anyone who would listen to me, I would say this to them. The U.S. consumer is in incredible shape by any measure. I mean, you're looking at a consumer that literally printed 4% in the first quarter. They're looking like they're going to print 3% in the second quarter, and there's momentum on their side. So this has absolutely nothing to do with U.S. fundamentals.
So
this is entirely what's happening outside of our borders.
You've got an economy from the consumer side that is performing well. There are no impediments to their spending and certainly high interest rates are not one of them.
No, of course not.
But businesses seem to be hesitant to spend.
Yeah.
Will lower interest rates be the catalyst that causes them to spend? Or is it something I cannot believe, frankly, that it is the price of money that is preventing them from spending. It has nothing to do with that.
This is not a monetary policy problem. This is a tariff policy problem, right? I mean, it doesn't get any more clear than that.
As Mike Breen says.
The Fed can keep on lowering rates, but I don't think they're going to get the end result. Or maybe more specifically, Donald Trump's not going to get the end result that he actually wants by the Fed cutting rates. I mean, if you want, it's funny. I think whether the president wants to acknowledge this or not, I think he's shooting the economy in the foot. I mean, CapEx should be much better. The fundamental piece, and without going into all the details, the fundamental pieces are in place for CapEx to actually perform really well.
How much of the tax cut that he, instituted do you think he's unwound with the tariffs?
Oh, I think all of it. There's no, and probably then some. I mean, so I'll give you a great example, Kelly, of what I mean by that. If you look at sort of 2018, we were running around telling people it's going to be a great year from a CapEx perspective, maybe close to 10%, all on the back of sort of this feel-good vibe that was in place from a tax cut perspective, et cetera. Keeping in mind, of course, I was saying that at the beginning of the year. Fast forward until February, March, April, May, June, you had all of a sudden this big rhetoric pickup in trade. And instead of a 10% year from a CapEx perspective, you basically had a 5% year from a CapEx perspective. So you're leaving growth on the table. That's the right way of thinking about what's happening from a tariff perspective.
Where did that 5% increment that Tom might have expected go? Did it go into stock buybacks?
It did not. I don't think it.
If it didn't go into CapEx, it went somewhere.
It went somewhat into
cash.
Cash. It hasn't been.
Balance sheets.
It hasn't filtered through into the economy so much, and we've certainly erased that with the tariff issues. So now, where do we go from here? As Tom says, I mean, if we go ahead with these tariffs as scheduled, September, December, computationally, it will wipe out the benefits of the tax cut.
How divided do you think this Fed is?
Extremely divided. So we just heard from the minutes that there were two members looking for a 50 basis point cut.
Yeah.
We know two.
We know who they were. I guess they don't say that.
They don't say that. And we might suspect that it could be Vice Chair Clarida. It's possible it's Clarida, and that would be really something if the Fed chair, there's really no recent precedent at all that the Fed chair would essentially get overruled by the rest of the FOMC. And so it was a really difficult press conference for Powell that, he has to give his view, but if he can't carry the rest of the committee, imagine that happening to Bernanke and Yellen, certainly Greenspan, right? They would carry the committee. So now this is a fascinating time where, Powell maybe can't do that.
Then you got to ask the question, is it time for him to go? If he no longer carries that committee, then maybe President Trump has something to Powell, you should find another job at this point. I don't know. What do you think? Yeah, I mean, look, I think that, cause is a hard thing to sort of define, right? Because that's really the only way you can get rid of a chair. Look, I think he will certainly finish out his term. I don't think that, I think it's a lot of rhetoric. I don't think he's going anywhere. But again, the point is well taken in that, it's funny. I think about that press conference, that last press conference. I mean, and by the way, the press did a great job of just like holding his feet to the fire, and he was so uncomfortable. I mean, that's the thing that came in. We wrote it. We wrote those words. Like, he just seemed really uncomfortable. So I think he sort of has lost the narrative a little bit.
We were in the middle of it, and the person to my left immediately said, when he said this mid-cycle adjustment,
I said, this is
you jumped on it, and you said that's why the market is going down, and
then he backed away, and then he sort of unwound it.
Damn, it wasn't the truth. It absolutely was the truth. I mean, you were on it as it happened. I'm telling you.